I am.
Wow.
So,
It's
Kurt,
yes, yes,
uh, I have some investors that want to come on and flip some property.
terrific.
So, what are we going to do as far as financing? They're trying to figure out if they want to go cash
Yeah,
or if they want to do hard money.
gotcha, gotcha.
So, can you just explain the difference between paying cash for an investment property and using a hard money loan?
Absolutely.
What is hard money?
Well, it's interesting because hard money can be quite a bit of few things.
Okay.
Let me address the cash thing real quick first,
Okay.
because if you're in a position where you have cash, then you are able to do many things depending on how much cash you have.
Mm-hmm.
But the one thing about having cash, a lot of people have a certain amount
Mm-hmm.
and they don't really want to give it all up, especially if they
Right.
have that money already invested in the market or other vehicles,
Mm-hmm.
because that money's already making money.
Right.
So they could use hard money if they're looking to buy investment property to make money, which is a great opportunity for hard money,
Mm-hmm.
because you can actually close quickly with a hard money loan.
Mm-hmm.
Again, it allows you to use somebody else's money. You're not using your own money.
Mm-hmm.
And there's many things, different types of transactions that you can do with hard money. In short, what hard money is, it's a situation where you're not really, you may be able to go to the bank, but if you do go to the bank, you're going to have to jump through a lot of hoops, a lot of paperwork,
Mm-hmm.
income documents, asset documents, and even other documents as well. That process in and of itself takes quite a bit of time. When an opportunity comes that presents itself,
Mm-hmm.
a property that's a really good deal, you need to move quickly on it. A hard money loan situation is perfect for that.
So, what's the difference
So,
in the close time, the time to close?
with a regular bank and hard money,
Yes.
at least half the time. Typically,
Wow.
oh yeah, typically with a bank, on average, and depending on the bank,
Mm-hmm.
but you're going to be looking at about 30 days. That's kind of
Okay.
average. Okay, with a hard money loan, we can close in 14 days.
14 days,
Oh
because
yeah,
it's like the same as cash, just backed by a private lender.
that's exactly right.
Did I
That's a
explain
good
that right?
way. That's a good way of putting it. It's
Okay.
really like using somebody else's cash.
Mm-hmm.
It is a private lender's money. It's short term, meaning it's used for situations where you have a deal, you find a deal, and you want to make it happen really quickly.
Yeah.
So you're going to get private money for short term,
Mm-hmm.
usually 3 months, 6 months, 12 months, depending on the scope of the project.
Mm-hmm.
If it's going to be a larger project, up to 24 months typically.
Mm-hmm.
But the idea is to take advantage of their money, to take advantage of the opportunity that you're looking to make money.
So that sounds almost too good to be true. So then there has to be something that the customer has to offset
There
with the
is.
fact. And so what is that?
Okay. The trade off is going to be, you're going to be looking at a higher interest rate than you normally would
Uh huh.
if you were to go to the bank. But here's what I tell everybody. Let me ask you a question.
Yes.
If if I gave you a 2% interest rate,
Mm-hmm.
if you could get a 2% interest rate, is it the 2% interest rate that's going to make you money? That's not really what's going to make you money.
Mm-hmm.
The numbers to the deal are going to make you money. So in other words, if you're able to buy a property at a certain amount, let's say $100,000, let's say we're going to do a fix and flip.
Yes.
You find a deal. It's going to cost you. It's a fixer upper, and it's going to cost $100,000 to buy that property, and it's going to take another $40,000 to fix it up. Okay, so we'll give you the 100,000, the 40,000, but after you fix it up, let's say it's worth $300,000.
Yes.
The 2% in this equation is totally irrelevant. It's
Okay.
because usually when you find those kind of deals in the first place, that's going to make you that kind of money.
Mm-hmm.
Whoever's selling it, they're motivated to sell it.
Mm-hmm.
They're not waiting around for you to get a 2% interest loan.
Right.
It takes too long.
Right.
They want to go ahead and sell it, get rid of it because of whatever their circumstances are.
Right.
They might be going through a divorce. They might be going through someone who recently passed away, or it's usually a hardship when you find those kind of deals, but they need to move quickly on it.
Yeah.
So in order for you to benefit and take advantage of that opportunity, you have to move quickly. So you look at the numbers, what it's going to cost you, what it's going to the cost to fix it up, what it's going to be worth, and then you're going to, when you sell it, look at how much profit you're going to make in that deal. That's the secret sauce. That's the equation.
That's amazing. That is amazing.